get recording of this. Yes. So as we have more and more women joining in, I just wanted to, start off 2025 with a very interesting concept. Sahil and I have been speaking for I think more than a month or so about doing this session for the tribe. And angel investing is one of those upcoming, very, very interesting investment opportunities, which I thought is worthwhile for all of us to consider and understand more about. While it is very exciting from the outside, I also think it comes with its own set of unique, skill set, unique risks that one needs to be aware of. And that is why we have experts who are coming in to support our tribe in understanding a bit more about what exactly can they expect if they're planning to become an angel investor, right? So I looked at some interesting numbers, and what I found was very, very, exciting. The number of startups, as far as I understand, and Sahil might be in a better position to correct me, but apparently over the last decade or so, the number has gone from somewhere around 400 to over a 1.5 lakh kind of a number. And I think recently the government announced, the DPIIT announced that they intend very soon that every district of India will have a startup. I think the penetration of the tier 2, tier 3 cities is almost at 49 to 50%. What I understand, limited understanding of this space. Being in this space, I can tell you myself that it's a very, very exciting time for startups in India. So without further ado, quickly introducing our speaker for today and also the platform which he will be representing. We connected with Inflection Point Ventures some time back. They are an angel investing platform which basically bridges the gap between bringing in investors, angel investors, and startups which have done some basic amount of revenues, etc., which would be worthwhile for people who are coming into this space and exploring this new investment opportunity, right? They are one of the largest names that you would come across in terms of angel investing platforms. That's why we've partnered with them. Sahil himself comes from an experience himself of being a co-founder in a startup. Sahil is currently the vice president at IPV. He's been kind enough to come in and do this session for us. Thank you so much, Sahil. In the first weekend of January, you've taken out the time to sit with us and do this. And quickly, a little bit about Sahil. Apart from having been a founder himself, he has also been a management consultant, and before that, he's worked in spaces like automotive, retail, aviation. So we will be in good hands, and I'm looking forward to very, very exciting, discussion with you, Sahil. So the floor is all yours. We'll have people joining in now. I've opened the waiting room. So let's get started and let's learn together.
Sure, awesome. Thank you so much, Neha, for that kind introduction. And I think this is the first time that we also are doing like a sort of woman-focused group kind of a thing. Although we've started noticing that in a lot of sort of neutral, otherwise events that we see a lot of women participation now. And that's
Yes.
sort of significantly gone up over the last couple of years. So I think it's a very interesting space, and I think more and more women are generally coming into understanding what options exist for people to invest. We see a lot of women entering into the stock market now, and this sort of, we believe, will be the natural progressions for women to now, as they become less sort of risk averse, more risk
Absolutely.
takers, they will want to enter into this kind of a space as well. So yeah.
Kyle, is there any data around this? Like how many women today are angel investors? And do you have any insight on that?
We don't have the exact numbers because angel investors data as such is not available. It's available on platform because you don't really need to register yourself anywhere. And then
Right.
there are a lot of angel investing that's happening in an unorganized, informal manner also, people
True.
investing with their friends. My sense is it will be about 15 to 20%. If I
Not
look
bad.
at
So
IPV
similar to the
participation.
stock market
Yes,
participation,
yes,
equity
yes.
participation. Awesome.
Yes, absolutely. Yeah. Chelsea, would you be presenting? Neha, would you be presenting?
I am
slides?
presenting the screen, sir.
Sure.
Yeah.
Awesome.
1 second.
Now, yeah, Neha, now that you mentioned that, it's very interesting because we see a lot of women entrepreneurs now. And as that happens and as the ecosystem matures and becomes female oriented, So it eventually, so you'll have women entrepreneurs, you'll have women investors supporting them, and that's basically how this entire ecosystem will develop.
Absolutely. I think it's both sides, right? As you have women showing up, the other side is also getting activated. And I see a lot of interest, like personally in Womoneysta, which is a women first platform. Even our conversations are directed towards women investors, so on and so forth, right? So totally understand where you're coming from. Um, all right, folks. So, how we're going to structure the conversation today for all the ladies here? We're going to get started, like I said, right from the ABC or the very basics of what's really happening in the startup ecosystem. What are the opportunities, which could be very exciting, but like we do in Womanista, not every opportunity is standalone great. You have to understand what it takes to become an angel investor in terms of the skill set, in terms of the risk. And I'm pretty sure Sahil has some very interesting ways in which IPV can step in and support women who want to take up this asset class going forward. So that's how we're going to structure it. We're going to have around 40-45 minutes of Sahil sharing his insights. Please use the chat box to keep throwing in the questions, even if it is during the session. Absolutely encourage that. And maybe then Sahil can choose to address it at the time or maybe at the end, however the flow is working. So yeah, I have a lot of questions as well, Sahil, which I'm gonna take the liberty of, bouncing off at you. So yes, the floor is yours now.
Absolutely. Awesome. Sure. So yes, so what we will discuss today is basically try and understand the angel ecosystem, the entire startup ecosystem a little better. And because I've seen now both sides of the table, I was initially a founder constantly looking for funds, and now I'm as an investor constantly looking out for high potential startups.
Which is
And
more fun, Sahil?
which is more tough is, I think, being on the founder side. I think wherever money has to come from is the relatively easier side. But I think here also we need to sometimes pick a needle from the haystack because we get, so I mean, just to give you some context, we receive about 7,000 funding requests every year, and we have to end up funding about 60 of those. So we fund less than 1%
Wow.
of what we have to see. So we need to eliminate 99%. And so now then there are several steps. So this is also definitely not easy. But at least you're in the right side, wherein you're the one who's supposed to give the capital than receiving. Asking for capital is always, yeah, I think a
Oh
bigger
yeah.
challenge. Yeah,
But in that sense, I also see you all are already doing the dirty work for the potential investors who are going to work with you, right?
absolutely. Yeah, that's what the platform does. They bring to you only that set of curated, screened, evaluated startups, which have a relatively higher potential for success. So that's how any angel investment platform typically works.
Awesome.
Okay, so a very quick brief about me. Neha, of course, mentioned. So I come
One
from
second. Sahil,
yeah.
before you start off, sorry, I
Mhm.
have questions already coming in. And sorry, Kshitij, you raise your hand. Anything you want to share, or is
Yeah,
that just
no, just a question. Sahil, so 1% is what you pick, right? That is where we can invest. Um, but within that 1% that you pick, right? What percentage? I know it's a spectrum, and some do fairly well, some do really well, and then some may go bust, right? But what's your success rate within that 1%?
So maybe I wouldn't spill the beans right now. I will get to that. That's the section of my presentation wherein I'll reach in about 20 minutes from now. And
Okay.
let me build it up and then bring those statistics and numbers for you. Yeah.
you can see, Sahil, people are literally itching to know. So let's not waste any time. Let's get moving.
Yeah, and I'm also a marketing guy, so I'll also ensure we bring it just at the right moment. Okay,
All right.
fantastic. So yeah, so very quickly a brief about me. Very typical educational background, engineer, then MBA, studied from Delhi College of Engineering, went to XLRI immediately post that, passed out in 2013. Worked with the Mahindra Group, did front-end sales for their automotive division, then moved on to their retail division. Did some management consulting work for Accenture across automotive, primarily a bit around retail and aviation as well. Ran my own company for about 4.5 years. It was called Happy Nature. We were a D2C dairy, milk and breakfast food product company. Reached revenues about 25 crores, valuation of about 100 crores. Decided to take an exit last year, and then thought of moving to the other side and understand how the ecosystem of funding startups work. And it's a completely different ball game, as I understood, where I think a few of my skill sets as a founder do really help me in empathizing and understanding what the founders need and what they want. But I think the way this entire ecosystem works is very, very different. And I think I find it very, very interesting. Yeah. So with that, we move on to the next slide. Now, maybe at this point, in case you guys want to put in what is it that you want to sort of learn today, so that I can tailor my discussion around that. No question is silly, no question is stupid. Every question is interesting. Please feel free to type in whatever you want. Is there anything specific that you're looking to learn? It could be just basics about the startup ecosystem, some interesting facts, anything. Yeah, minimizing risk. All of us definitely do want that. Across all asset classes, how do we minimize our risks while maximizing our returns? So while in case anybody wants to type in, what we will typically try to cover here is basically what in this entire startup ecosystem is all about. What is it about the India growth story that's making it so attractive for investors, not just in India, but across the globe? How is it different from the other asset classes wherein we invest? How we at IPV are democratizing this asset class. It's not just for the ultra HNIs or the super rich or the well-connected people. We want to make it available to almost everybody who has the potential to invest even in the stock market. They're the same set of people who are investing here. Yeah, so how to start with angel investing? Definitely. Risks and rewards, we'll talk about it. Checklist, top 5 things we look at while evaluating. Sure, absolutely. Legalities, technicalities, absolutely, we'll cover that. Awesome. Okay. I think with that, we move on. I think we have a small trivia. So maybe we start off with that. And here we
Making us work hard. Huh?
absolutely. Okay, so how many of you, without checking your phones right now, can tell me what's the current Sensex or Nifty, whatever, in case you people follow? Ballpark number would be fine.
We will refrain and let the others speak in here.
Yeah, in case you want to type it in, anybody. And if somebody is happening to write it down, or somebody is an investor here, somebody who invests in mutual funds, stock market, maybe what were the returns also that the Sensex generated in 2024? So for those of you who follow the markets were at an all-time high in 2024, around, I think, July, August. They hit, Sensex was at about 86,000. The election results had come in. Markets were at an all-time high. And I think, so Mishri, you're on. Yeah, I think you became unmuted. Yeah. Sure, thanks. Yeah. Yeah, excellent. I think hoping you people haven't checked Google, and this is so you are tracking the markets. Very interesting to know. Yes, it is about 77,000 and close to 78,000. It saw very interesting times. The market last year, I think, did a lot of funny things. A lot of new investors came into the public markets because we saw all-time highs, a lot of stocks breaking their 52-week highs. It reached close to 86,000. Unfortunately, it's back to about 78,000. After all that happened, eventually the Sensex returned about 8.5% in the last year. At one point of time, the expected annual returns were anywhere between 25 to 30%. That's what got people very excited. Eventually, it was 8.5%. And that's a trend that we typically see across every election year. So if historically you pick up, markets tend to become very, very bullish before an election is expected to happen, especially when the mandate is expected to be towards a certain party. And if it's expected to not be a coalition government, for it to be a stable government, that's when markets really rally. But then there are investors who will then start booking profits, and then investors like us typically tend to suffer. And that's why it's very important to be here in the long run. It's difficult to make money in the short run, even in the public markets. But eventually, so in the last 3 years, it's been about 11% the returns, and generally the returns in the stock market typically will be about 12 to 14% if you stay for a long period of time. Okay, I think one more question we have. Okay, how many? So firstly, a unicorn, for those who might not know, is any startup valued at $1 billion. Anybody knows how many unicorn startups are there in India? And if you do, a ballpark number would also be fine. Then how big is India in terms of when you compare it to the rest of the world? In terms of the number of unicorns that India has, at what rank would it lie? Yeah, Ritika says 116, around 100. Absolutely. So I think the latest number is about 117 or 118. So very, very close. And now I think comes a question which is relevant for all. How many of these are women-led?
2%.
20%, Geeta. Interesting. Yeah, the answer is actually, and I think it's more than 20 now, and it is so close to 20%, and which is a very, very positive sign. I think some of these founders have actually become household names. I mean, the founder of Nykaa Falguni, or somebody like a Ghazal, founder of Mama Earth, or a Benita Singh, founder of Sugar, even somebody like a Shraddha Sharma, who's the founder CEO of Your Story. I mean, these people have become household names, and they're running serious companies, right? And they're equally involved as their male co-founders in case they exist in these companies. Some of them are, in fact, the ones who are the front-facing. So, for example, Vinita in Sugar is more popular than her husband co-founder. And now, similarly, Ghazal is more popular than Varun from Mama Earth as well. So these are very positive, encouraging signs, not just for females in general, but I think for the entire ecosystem, for the entire country. Because when everybody grows, that's when the economy grows, and it helps the country to grow overall. Yeah. Now, what is it that, so we brought in this slide specifically because we just wanted to understand, where do women lie in this sort of entire setup of investing? Yeah, Chelsea, we can see the whole slide. So some feedback, some research that has been done, it says about 1 in 10 women say they don't really understand what investing is, and only about 28% say that they are confident about investing their money. Mostly they rely on their husbands to take that decision for them, or some friends, most likely males, who understand this space and help them with their investment decisions. Investing has always been seen as a male domain. So even now, women are earning almost as much as men in some of the households, if not more. But the men are the ones who do the investments, and women take care of the household expenses. That's how it's typically been. Also, women have been a little risk averse. So unless they believe that their disposable income is significantly high, is when they look at investing in relatively risky assets like the public markets or even the private markets. And yeah, so why and what can be done? We raise awareness because what is seen is women are naturally actually suited to investment. The skill set that you require is for people to be less impulsive, somebody who has the ability to sit, think, reflect, which is a trait that is actually more prevalent in women than men. It's important for women to start young, so they should start looking at making themselves financially literate. And of course, look at peers, look at role models, women in this space, follow them on social media, just try and see how they think, and you'll be able to relate better. And as it is said, if women start investing at the same rate as men, there would at least be another $3.2 trillion from private individuals. And that's what a report in 2021 said. Yeah. Okay. So with that, we quickly move on to one last trivia. And this is now when we get into the angel investing bit. Info Edge is the parent company of Naukri.com. Their founder's name was Mr. Sanjeev Binchandani. He, at a very early stage in about 2010, when Zomato was, I think, called Foodie Bay at that time, and they were uploading menu cards from restaurants. They were not even delivering food, nor were they booking tables. They had just uploaded menu cards. Sanjeev decided that he would put in some money in this company run by a fellow named Dipinder Goyal. And he put in about 4.5 crores, which wasn't really too much for him, right? I mean, he could afford to put hundreds of crores, but he thought, yeah, let me take a bet on this company. Let me put in 4.5 crores as investment here and see where it goes. Guess what happened 10 years later? If in case anybody has an idea of how much his 4.5 crores is worth today. Has it become 10 times, which is phenomenal, right? I mean, which asset class gives you 10x returns in 10 years? Is it 50 times? Is it 100 times? Is it, I don't know, 1,000 times? Yeah, maybe you could put in your answers in the chat window. Okay, Maya says it's 50 crores, so you think it's about 10x. Interesting. 10x is a lot, I mean, think of it. 100x, wow. Very interesting. So a lot of people think it's 100x. So from 4.5 crores, you're saying it'll become 450 crores. He's a really lucky man if in case that has happened, right? Yeah. So let's see on the next slide, Chelsea, where okay, so the value of his investment as on date is 10,500 crores. That 4.5 crores is now 10,500 crores at the price. So it's actually given him 2,200 times returns. And in 2010, it could have very well been any of us, right? I mean, if we would have put 4.5 crores, we might have put 45 lakhs or even 4.5 lakhs, right? And that too could have given us phenomenal return. And this wasn't a fluke. He did something similar in a company called Policy Bazaar in 2012. I think he became a little more confident after what he did in Zomato. So instead of putting 4.5 crores, he put in 20 crores. And that too is valued at about 8,500 crores today. So some people say that whatever he's earned from Naukri.com is actually smaller than what he's earned from just simply investing 25 crores in these two particular startups. And that, very honestly, is the power of angel investing. And that is the context that we wanted to set, because I don't think there is any other asset class that has the potential to really alter lives of people. Now, why is this happening? Why is this, what is so special about this India startup growth story? I think it's all about the backbone of why this is happening is essentially the internet penetration that has taken place over the last 14, 15 years. So from having about 4.5 crore internet users in 2007, we today have 88 to 90 crore internet users. And that is what is making a huge difference in this entire startup ecosystem. From using dial-ups of connecting wires to our landline phones, today we're consuming 20 GB per user per month on an average, which essentially means a lot of us are consuming about 100 GB per month, right? Look at where digital payments have come in. Post the launch of UPI in 2016, today we're making $11.2 billion in payments per month. And as I think, Neha, you rightly said, from being about 3,500 startups in 2007, when I think Flipkart was the only one that we had heard of, today we're about 150K startups registered. And of course, there would be several others which have not been registered as well. Funding is about $11.5 billion in 23. It's gone up by 20% in 24. I think about 900 plus startups were funded, and the total funding is about 12.5, $13 billion last year. Yeah, next slide, please. And yes, so as I was mentioning, so this is how in India unicorns were formed. 2021 and 22 were fabulous years for the startup ecosystem, in the sense a lot of funding took place. I think about $25 billion was spent by VCs in funding startups. 44 unicorns were created in 2021 itself, which was more than all of the others put together before that year. 21 continued to happen in 22. Things became a little tepid since then. That's typically all these industries are very, very cyclical in their nature. You will have these upswings and then you will have some downswings as well. But as a smart investor, there is always an opportunity to make money during the downswing. Very often, individual investors tend to lose money in the upswing because we tend to buy a lot when the markets are high and actually start selling when the markets become low. But I think in our case, and that's what we'll talk about a lot more in detail, is we typically should buy when the markets are low and sell when the markets are high. Some interesting sectors that are coming up, and this is, I think, the power of startup investing, angel investing. You get to see what is going to happen in the next 3 to 5 years' time. So public markets will continue to show reflection of what is happening today, what the consumers need today. But I think in the startup ecosystem, you get to see what will happen 3 to 5 years down the line. So of course, renewables is a space which is expected and is bound to grow at a rapid pace, not just in India, but across the globe. It's expected that 64% of the installed capacity in the next 5, 6 years would be renewable energy. Drone sector has already become huge. I mean, now at IPV, we've reached a stage wherein we've started rejecting drone startups unless they bring in any specific differentiation, because we've seen so many of those now. We don't really see them in real life, but I think anything that where we invest, typically you start seeing that in real life in about 2 to 3 years' time. Space sector is again another area where a lot of Indian startups are now coming up. And Gen AI, of course, I mean, it's everywhere, right? There is no startup which comes to us now without having AI in some or form or the other in it. So yeah, these are some of the sectors. And of course, several others. Health tech, again, is growing rapidly. And within health tech, we see a lot of strong tailwinds for mental health. And we will now, over the next 2 to 3 years, see a lot of interest in this space as well. Now, why should you invest, or why would you want to become part of this startup ecosystem in India? So as you would see, we very honestly, all of us believe that the whole purpose of doing this is to grow your wealth. But very honestly, we put it at number 5, because your wealth creation is actually an output of everything else that you do in the startup ecosystem. So I think first and foremost, you help really grow your country, right? By supporting young startups with capital, with expertise. You help them build a company, they generate employment, contribute to taxes. They do so much, right? So by supporting young companies, you're actually helping grow your country. Second, it really, really improves your business acumen. You get to sit on the board of companies, you get to mentor those companies. You'll never do that in a publicly listed company, right? If you buy a share of Reliance, that doesn't give you access to Mr. Mukesh Ambani. But when you actually buy shares into these startups, you get access to the founder. You have meaningful discussions, you share your knowledge, you learn about new sectors, about what is happening. And that's what leads into growing this knowledge base. What we at IPV see, sectors that we see, people have no idea that those are the kind of things that are going to happen in the next 2 to 3 years. So you're really ahead of the curve in terms of understanding what the trends are, what is going to happen in the near future in the country. You grow professionally, you can actually become SMEs, you can do, Chelsea, you can stay on the previous slide, yeah. It gives you an opportunity to grow professionally, you can become SMEs, you can consult these startups. And of course, when you do all of this, wealth creation is a natural outcome of what will happen. You also get to grow your network in an angel platform. These are like-minded, smart people who are investing. There are several opportunities to network, offline, online events, wherein you'll get this opportunity. And it can even help your company. A lot of people get into startup investing because of the profession that they're in. Some are digital marketers, for example. They get in touch with these startups. Eventually, it helps them in driving revenue for their own company as well. Yeah, next slide, please. So how have the traditional asset classes performed? Yeah, Sensex, this is about a year back. So at that time, Sensex was growing. It gave about 22%. But that, as I mentioned, on a long-term horizon, anywhere between 12 to 14% is what you can get. Gold, again, anywhere between 10 to 15%. Real estate, those in Gurgaon would maybe laugh at this number because they've seen their properties doubling in the last 3, 4 years. But on a long-term basis, it always averages out, and it's about 8 to 10% at best is what you get from real estate as well. And then FDs, debt instruments will be always between 6 to 8%. Interesting story here. Mr. Rakesh Jhunjhunwala, who was one of the most celebrated investors, sold his CRISIL. So there was CRISIL as a company. He owned shares in CRISIL. He sold his CRISIL shares in 2005 because he wanted to buy a property. He sold it for about 27 crores. Bought a property. The value of that property in 2015 was 65 crores. Again, smart investor, phenomenal decision. 2.5 times wealth grew in just about 10 years. But unfortunately, that day he also happened to look at his Demat account and just wanted to check what those CRISIL shares would have been worth had he not bought this property and had he stayed invested in CRISIL. He realized that CRISIL shares on that particular day when he was checking out his property price were actually worth 600 crores. And that's the kind of power investing has. So people who do a lot of real estate do it. Do it if you want to buy, if you want to stay, do it for emotional reasons. When doing it strictly from financial reasons, just step back and think where your money can actually grow for you. The government has taken some interesting decisions. Now they have brought both private markets, public markets sort of on the same footing in terms of taxation. So both are taxed from a long-term capital gains perspective at 12.5%. Earlier, public markets were at 10%, so they were brought up to 12.5%. And angel investing was at 20%, that was brought down to 12.5%, which just shows that the government is also keen on supporting this space. They realize now the value of this entire startup ecosystem, how it's generating so much employment and bringing about a change in the entire Indian economy. Yeah, next slide, please. So very quickly, we'll run you through what these stages of investments are. You would have maybe read about these in the newspaper. So typically smaller ticket size, we call these as angel investments. You become slightly larger, you call this seed. Eventually it moves to growth investment, crossover, and then late stage buyouts, which happen just before a company goes in for IPO. You would notice that the potential returns tend to reduce as the company matures because the risk that you're taking there is, of course, much, much lower, right? Company has already become big, it's matured, you know where it's headed. When the information is publicly available for all, that's not when you make money. When the potential to make higher money is actually when very few people know about what's happening. And that's when if you get access to that particular information. We typically at Inflection Point Ventures operate at an angel to seed kind of a stage. We also have a VC fund called Physis Capital, which goes from seed to growth kind of stage. Generally, individual retail investors can't enter at a late stage anyway. These are professionals, private equity firms, venture capitalists. It's only generally at the early stage when retail investors get an opportunity to enter. And that's where the potential for making highest returns also exists. Yeah, next slide, please. Okay, cool. So now we have a special quiz. You can all just scan the QR code here, or you can type in this thing of menti.com. So this is a quiz. It would be primarily based on whatever we've discussed so far. It could have questions from beyond that as well. Just register with your name and phone number so that we know in case there are two names which are the same, we know there's a unique identifier there. And finally, what we will do is that the top 3 winners with the most correct answers in the shortest time, this is what Menti does. It will do that for us. We don't have to do it. So it doesn't just stand a chance, will get a complimentary 6 months IPV membership. Chelsea, can you check? I'm just seeing a comment saying that says quiz is not active. Can you just check?
Sure, Sahil.
We can even do it later in case there's some technical issue.
No, we can do it. So as soon as I just switch the screen, everybody can enter the. Meanwhile, they can just register themselves.
Sure.
Yeah.
Okay.
Okay. I'll just use another 1 minute and then I'll switch the screen. Yeah.
Sure. So you can just enter. I'm assuming you're able to enter. Just enter the code.
No, it's saying the quiz is not open. Please wait for the presenter to activate it.
Let me do that. Yeah, then allow me a minute. Mehak, meanwhile, if you can just put the Menti code in the chat window for everyone. Yeah.
Sure.
Okay, so I can see questions also in the meanwhile. Uh,
Sorry, do we go to the website or do we just scan and
it's
wait
the
for?
same. It's exactly the same. It should ideally just take you to the same place. Yeah, I think now everybody should be able to enter.
It's saying you have to enter a code. What code should be entered there? I'm not sure.
It's there on the chat window. It's 45443804. I think we'll just wait for another 30 seconds. We already have 18, 19. Okay, I think we can start. I think those who had to join would have joined by now.
Yeah,
Okay.
let's get started, I think.
So it's just like a CAT exam. It's both speed as well as accuracy. Which of the following Indian startups has most recently attained the coveted unicorn status? This wasn't part of this thing, so this is checking your general knowledge now. Unicorn is, of course, a company valued at $1 billion. So it's a significant milestone in a startup's journey. And that's what typically gets tracked across media houses as well. Oh, awesome. Yeah, I thought mostly people would believe because Zepto has been so much in the news, but it's actually a lesser known company called Moneyweb, which recently became a unicorn. Okay, 4 people got it right. Not bad. Great. So we have Jyotika, Neha, Wendy, and Meha as the top 4. Okay, second question. How much returns did Sanjeev Bikhchandani generate out of his investment in Policy Bazaar till date? Now, this will definitely check people who are listening carefully and intently. Yeah, fantastic. Yes, mostly I think people got it right. It was 226 times. Phenomenal. Oh, we'll see a shift now. Is that you, Neha, or at the top, or is it?
No,
Me,
I'm not.
another
I'm
Neha.
not. We have
It's-
another Neha. I'm not
Yeah.
participating.
Okay.
This is for the community. So
Awesome. Third question. Yeah.
पता चले नेहा पार्टिसिपेट करिए नेहा ही सारे आप लोगों के बेनिफिट्स लेके ऐसे नहीं.
Which of the following is not a profitable exit for investors? So what that means is when this particular situation happens, when is it that investors don't make money? Is it something called a liquidation? Is it a merger and acquisition or a strategic buyout by another company? Is it a follow-on round by a venture capitalist? Or is it an investment by a large family office? Wow, smart set of people. Nice. The liquidation is essentially when a company sells off its asset, it has to shut shop, and yeah, that's when investors typically will not make significant money. Awesome. So we have Ashna, Amrita, and Neha as the top three still. Great. Next question, please. What is the minimum valuation of a startup to be categorized as a mini-con? Is it 10 billion? Is it a billion? Is it 300 million? Or is it $1 million? Yep, the answer is $1 million. A 10 billion is called a decacorn, a 1 billion is called a unicorn, and I think something that's close to a billion is called a sunicorn. But this is what is called a minicorn, which is $1 million. We've got a newer leaderboard with Neha, Shruti, and Ashna leading now. Okay, last question now. Hi, is it done? Which Indian startup was the country's first unicorn? Very interesting. Is it Flipkart? Is it Ola? Is it InMobi or is it Paytm? Just a hint, it might not be what you're thinking it is. Yeah. And the answer is InMobi, and everyone thought it would be Flipkart, but there was one before that as well, which had attained a unicorn status. Fantastic. Fantastic. So Ashna, Neha, Sonali are the top three winners. Many, many congratulations to you. And all three of you win a complimentary 6 months IPV membership. To just give you context, the membership otherwise is for about 35,000 per year. So you get a complimentary 6 months membership. You not just get access to the entire IPV platform, you get to listen to all the startup pitches. You get access to all of the networking events that we will do, which will of course be free for the member. And you will also get to invest in the startups.
Fantastic. Totally worth the fastest finger first. Ashna, Sonali, and who's the third one?
Chelsea, do you have the list? If you've taken
Neha,
it.
Sonali, and Ashna. So if you can post
Oh,
your contact
superb.
details also in the chat window.
Yeah, please.
So our team
What
will
do we
Also, yeah,
post?
if they can,
What details?
I think just maybe your phone number and your
Yes.
name would be good. Then our
Yes.
team will help you set up your profile and give you access to the application and everything.
Okay, I'll
even
DM
for
it to Chelsea. Is that okay?
Sure,
Yes, sure.
absolutely.
Okay, thank you for this.
Thank you.
Awesome.
Thanks, Lord.
Okay. Can we have the slides back again, Chelsea? Now that people have won, we might as well tell them what IPV is all about as well. Yeah, so with that, we introduce IPV to everyone. What we are an angel investing platform. What that means is we evaluate, screen, do due diligence of startups, those that we believe have high potential for succeeding in the near future. We bring them onto the platform and then allow our IPV members, the retail investors, to actually invest into those startups. Yeah. Just to get a sense from everybody here, is there anybody who's invested in startups ever? You can maybe just write a yes or a no. And in case you're writing a no, maybe one small reason of what has prevented you from investing in startups. It could be anything. It could be that you don't know of how to invest, where to go, anything. And in case it's a yes, then absolutely fantastic. Okay, Soumyashri says we don't have any knowledge about this asset class. Yeah, Geeta also says not aware. Maya says not clear about the process. Valuri says, never knew how to invest. Absolutely, even I didn't till about a few years back. Amrita says, don't know where to start. Yeah, I think so. The common uh, sort of theme in this entire theme seems to be that nobody really knew where to start, right? There are some other reasons as well. Typically, even those who have heard about this asset class do not know, of course, where to start. Uh, how much to invest? I think that's one of the questions that I saw in the chat window. They don't know what is the minimum ticket size for investment, how risky it is, how often do startups fail, and that's one question I think got asked earlier also, what is the success rate? Access, as very rightly put in, we don't know where do these startups come, when do they come, when did Mr. Sanjeev Bikhchandani get access to Zomato, why didn't I get it, right? How does he get it? Yeah, risks, and of course, once I buy the shares, who will then buy them back from me? How will I make money? Okay, so yeah, let's start. We call this the SMART problem. Yeah, and so size of the ticket is, of course, a problem. Ticket sizes have traditionally been very large. You only hear of crores of investments being made. People who are only ultra HNIs get access to that asset class. How is IPV solving this problem? What IPV does is it allows you to start your investment journey for as low as 1 lakh rupees per startup. So by putting in 1 lakh rupees, you become an angel investor, you get shares of that particular startup, and now you're involved with the growth story of that startup. Mortality, I think the biggest challenge with startup investing. Traditionally, we've seen more than 90% startups fail, right? Who wants to put their money in an asset class where only there is the success rate is as low as 10%, right? Now let's see how IPV has solved it. In a portfolio of 227 startups that we've invested in till date, only 21 have failed, which means our failure rate is actually just less than 10%, contrary to industry standards where the success rate has been 10%. Yeah. And this we do through a round of thorough due diligence, evaluation, screening, and most importantly, post-investment support that we provide to the founders to help them grow and help them reach the next round. Access, right? Investors lack post-investment insights. Even if you put in money, maybe through a friend or through somebody who advised you, would you even ever get to meet the founder? Would you ever know what is happening with those startups unless finally you just one day get told that that startup is shutting down, your money is gone? What IPV does is after every 3 months of your investment, we have something called a starter investor partnership call. The founder comes onto a call, gives his business update of the last 3 months, shares his business plans for the next 3 months. It gives you an opportunity to ask whatever questions that you have. It also gives the founder an opportunity to ask for support from the investors. There could be a D2C brand, they want to list on Blinkit, they haven't been able to do so. They can come here, say, is any of the investor part of the Zomato ecosystem? Can somebody help me onboard onto Blinkit? Yeah, in all likelihood, in every startup, we have about 100 investors from IPV. You will find connects for whatever you are looking for. Risk, startups encounter fundraising growth uncertainties. IPV has a dedicated team called Let's Grow. Comprehensive post-investment support, both in terms of growth as well as fundraising, is provided. Tradability, who will buy your shares, right? IPV has 25,000 people on their platform, plus connects with over 500 plus venture capitalists. We ensure that when the startup is looking to raise its next round, we are able to provide liquidity to our investors. Those next round of investors are able to buy shares from the IPV shareholders at a higher valuation. And that's typically how you are able to get an exit at a higher valuation. That's how we solve the SMART problem. Now, why IPV has a higher success rate? As I mentioned, we on an average look at about 6,000 to 7,000 funding requests in a year. We end up funding about 50 to 60, which is less than 1%. It's almost as tough as giving an IIT JEE exam, with just the top 1 percentile qualifying. 99% have to drop off. Our typical process is we receive a pitch deck. We have a team of panelists which evaluate that pitch deck. It goes through once, only about 80 to 90% get dropped off there. Then there is somebody like me who will talk to the founder. If it has passed through, I will have a discussion. I will typically end up rejecting about 50% of those I'm having a discussion with. The remaining, send it out to my founder. He will have a discussion. If he thinks it's good enough to take it forward, That's when we allow the founder to pitch to our entire network base of 25,000 investors through a Zoom call. Once that happens, and once we receive a positive feedback from the investors who attended the call, that's when we do a thorough due diligence of about 4 weeks, covers everything, financial, legal, commercial. We become mystery shoppers. We call up the vendors, customers, do everything that you can. And that's when we at IPV will come onto the platform, present our due diligence findings in a 1-hour call. It happens every Saturday. It was happening today as well from 10 to 11. That's when investors attend, ask their questions, we answer those. And that is the time when we give the investors an opportunity to commit to investing into that startup. And once we've invested, there's an entire support process that I mentioned. We have a Let's Grow team. We have those quarterly calls. We ensure that till the time we get an exit from that startup, we are very strongly in control of whatever is happening there. Yeah, next slide. So this is sort of our report card in a way. We've given exits in about 47 startups. What that means is that all of the investors in those 47 startups, people have sold off their shares and they've got money in the bank. IRR is nothing but an annualized return. So for these 47 exits, the average IRR is more than 100%. What that essentially means is your money is doubling every year. So if you would have put in 2 lakhs, for example, and if the startup would have given you an exit in 2 years, you would have received 8 lakhs in those 2 years' time. Follow-ons is a term that we use. What it means is the startup has raised a subsequent round of funding. We have not taken an exit. We are still continuing to be shareholders in the company. However, the value of those shares have gone up without us actually taking the money in our bank account. So you will find some names that you would have seen. For example, BharatPay was one of our earliest investments run by a fellow called Ashneer Grover. We had a few investors on our platform back then. They had invested about 5 lakhs each into the startup. In 22 months' time, they all got a return of 4 crores each. There was an 80x exit that all of our initial investors received in this company called BharatPay. And I think that's what gave IPV also the confidence to really scale and expand and realize the value of this particular asset class. There's another company called Fitso. We sold it to Zomato. And now it's sold to Cult, made good money there. Milk Basket got sold to Reliance. Again, IPV got great money there. There's a company called Torch written over there. Many of you wouldn't have heard about it. Even I hadn't. We gave a 41x return to our investors. To just put that in context, somebody would put in 2.5 lakhs, got 1 crore back in about 26 months' time.
Wow.
Some startups where we take partial exits, because we feel that they will continue to give us strong returns later. So we maybe take out certain part of what we had invested and continue to stay invested. For example, Blue Smart, all those in Bangalore, Delhi NCR would understand what Blue Smart is doing to the entire cab hailing ecosystem. We continue to stay invested. It's one of our largest investments that we've made there. Stage is another company where we're deeply invested. It came on Shark Tank as well recently. A dating app called Truly Madly doing very, very well. Somebody might have heard of OTP. It's a fruits and vegetables startup. Again, one of the startups where we're really looking to take it to IPO. And then, of course, follow-ons, several that you wouldn't have heard of right now. You will hear of them maybe 2 to 3 years down the line. Some are not into the consumer space. So unless you're from that industry, you wouldn't have heard about it. But again, so we are sector agnostic. We are early stage investors. We typically back startups at an early stage, and we'll back them across sectors. So we'll have one startup from almost every sector that you could think of. Yeah, and we've been seeing a lot of women participation in so these are just 4 amongst, I think we'll have about at least 30, 40 startups which are founded or co-founded by women. Secret Alchemist is one startup that has recently been in the news. Here, the founder CEO is in fact a female. And very recently, Samantha Prabhu, the actress, became a co-founder of that particular startup. It was all over the news. And if you check out her Instagram feed, she posts a lot about this particular product. It's into aromatherapy. We funded this about 6 months back. We're already seeing great traction here. A company called Beetle Leaf, very interesting. Again, husband-wife duo running the show there. They do online pans. You can have them on Zomato, Swiggy, again, doing phenomenally well. Noto, I'm assuming a lot of people would have heard about this ice cream brand, healthy ice cream brand. Funded this about, I think, 3 months back. Deal was highly oversubscribed. And I think they ended up funding about 5-6 crores to Noto, as against they needed, I think, 1.5 crores back then. Yeah, so some such interesting examples. And that's what we look for. It's great to see women in the startup ecosystem. Some of our startups have also been on Shark Tank, as I mentioned. Those who follow Shark Tank would see it, Stage, Conscious Chemist, Devnagri, all of these startups. It really helps them. We funded them and they go to Shark Tank. They get a lot of visibility, a lot of traction into what they do, and it helps them with their sales and us with our investments. So we really encourage our startups to consider Shark Tank, and wherever possible, if they get selected, it really helps the both of us. Yeah, next slide. Yeah, so I think this is what Warren Buffett always used to say also, that we simply attempt to be fearful when others are greedy and to be greedy when others are fearful. And we continue trying to do that. And so whenever there's a down cycle where people are really fearful and they don't know what to do, that's the time we actually invest heavily. We did that in about 2019-20. When the whole world was going gaga in 21, 22, with so many investments, so many happening, we were actually selling because we were getting the right price. And again, over the last 2 years, we've made about 110 investments. Again, this is a slight down cycle. This is the time when we get to invest in startups at very, very low valuations. So it's a great time. We try to buy low. And then again, when we see that trend picking up, that's when we look to sell again. Yeah, next slide. Yeah, I think we can move on to the next slide. These are just some of the ways people get exits. Yeah, and as we always say, we don't stop playing because we grow old. We grow old because we stop playing. And we've seen that in famous investors. Famous investors somehow have ended up living for very, very long. You've got a lot of these people above the age of 100 as well. And these were all remarkable investors, and they stayed young for long.